You have a lot of these institutions that were interested in investing in Bitcoin. They were already a little nervous. Now with FTX, forget about it.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway giving us his Bitcoin price prediction and crypto market update, as well as how the stock markets are being affected by the current inflation and rising interest rates by the Fed. Even though Soloway is in the position where he doesn't believe we will advance to a higher level, he thinks that there is still more of a downside. Gareth took profits with a long position in Bitcoin as well as other digital assets. With his current level of exposure, it's a short-term strategy to play up into resistance levels, and once there, he'll be looking to take more profits. Let's check out this update with Gareth Soloway as he talks about the issues with more potential lows being in the crypto market. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The bottom line is, and I always like to put the positive, I'm a positive guy, I like to put the positive spin. You know, the FTX fiasco is probably the beginning of the end of the move down, meaning that, yes, there's more downside, but this is that final flush out that we'll see. The thought process behind 9,000 is becoming clearer. I did a lot of recent technical work comparing history of Lehman Brothers and the collapse in 08 and how long it took the S&P to bottom, which was about 5 to 6 months, and then looking at the percentage drop in the S&P 500 from Lehman Brothers to when it bottomed in early 09. And really what it was is it was about 45% drop in the S&P, 5 to 6 months is what it took. So they are very similar. I mean, in terms of, loaning out money and leverage, banks that overextended themselves with leverage in 08. I mean, that was one of the big issues with the crisis, is that they were giving out so much free money and just so much in bad loans. So the bottom line is that there's a lot of similarities there. And one of the things that I've learned in the 20 years of trading is that human emotion doesn't change, which is why history tends to generally repeat, if not rhyme. And so the greed and fear aspects are the same. Doesn't matter if it was the dot-com bubble, the tulip mania of the 1500s, where a tulip bulb could buy you a whole house, a mansion, in fact. You just see these things repeat over and over and over again. In terms of the chart, one of the things that I love showing, and this is actually new, I've never shown this before, but if you look at the Terra Luna collapse, Bitcoin was trading at around 31,500 and collapsed down in about a week down to 17.7-ish, right? So that was about a, not quite 50%, but we'll call it 40% drop in Bitcoin. Now, if you look at FTX, which by itself is probably a little bit of a greater shock to the market, the drop in Bitcoin went from like 21,000 to about 15 and change, which is only about a 25% drop. And what why I bring that up is that it basically shows us that the market is adapting and buyers are starting to say, okay, yeah, that's bad, but it's getting to that point where there's not that many people that are looking to dump anymore, and the price action is not getting as negative as it was. Like if we saw this collapse be 60%, then that's scary, right? Then you're seeing bigger swells of price drop based on the news, but it's actually the opposite. So again, I think to me, yeah, there's some more downside. You're going to have forced liquidations of a lot of balance sheets that have a lot of coins on them. We know Solana, FTX has a ton of Solana and some other stuff. So there's going to be pressure.
Soloway is bothered by not seeing enough disruption in the crypto sphere. He also explains that even though the Fed will stop hiking later this year, he believes we'll be seeing an extremely destructive event coming down the line. Soloway says that the Nasdaq is actually starting to collapse, and with the stock market's downfall, this will actually strengthen Bitcoin.
You have a lot of these institutions that were interested in investing in Bitcoin. They were already a little nervous. Now with FTX, forget about it. They're like, all right, we're waiting until we get regulation before we even go near this space. So it takes a lot of those buyers out, which means that there's going to be kind of this open area where you could fall a little bit lower, but it's getting there. And that's exciting to me because I've been waiting since 65, 69,000 to start buying and accumulating. And I'm finally starting to kind of nibble a little bit as we go lower.
What here indicates to you like that this is definitely a cycle and that it will definitely come back? Now, I know we have 14-ish years of history on these things, but I think there's a lot of fundamentals out there. Even just the simple, we've only seen Bitcoin in a quantitative easing environment until the last year or so. And so now we're in a QT period. How does the macroeconomics, like, why should we assume that the cycle will just play out the way that it's played out before? Because there are so many different fundamentals today.
Yeah, and I think we have to be ready for the cycle to be slightly elongated, right? So if you look at the 2017 high, it bottomed essentially 1 year. It was about 12 to 13 months later. In this cycle, we're already a year in, and I still think there's at least another 5-6 months out. And the whole idea there, the fundamentals make sense because, like you mentioned, the Fed was printing money in all those previous bear markets, so it got us out faster. So you have to think that this one will last a little bit longer. This one could be a little bit deeper. So there's always that chance it goes lower. For me, in terms of why do I think it will rise again like the Phoenix, right? It's more so that you look at the big picture, and there's this fundamental need in mankind for trust, for knowing that there's something that's kind of a store of value, which, by the way, was gold for thousands and thousands. I mean, you go back 5,000 years, gold has always been that. But I think there's this need now in this technology-driven economy where we need something that's digitized, right? So for me, it's saying, sure, the Fed turned off the printing presses for now, but when we get in a depression or a really bad recession and inflation, maybe the inflation's not to 2%, but if you have 4% inflation and let's say unemployment goes to 25%, which would be on par with like the Great Depression, you can't tell me they're not going to be like, we need to print money again to save, bring us out of this depression. And so, people fundamentally want something that they can say, okay, even if they go to print, I can store my money and keep my value in this. And so for me, that's kind of the driving force behind it. I love the fact that there's been so much big adoption. Granted, it's still in the infancy. You have billionaires and multiple hundred millionaires adapting to this technology. And you also have the blockchain starting to take over more and more with like companies like Microsoft buying out certain other companies where they're getting involved. And so it does tell me that this is a long-term project that should survive, but by no means, 9,000 is my low, could go a lot lower before it doesn't. And again, the way you mitigate that, by the way, and again, it's a great question of like, is there a chance that Bitcoin doesn't survive like the tulip mania of 1500? Yes, there is. And the way you mitigate that, just like any investment, is by allocating the proper amount, where if it doesn't, it sucks, but it's not, it shouldn't break you.
Sure.
I have a small percentage of my overall liquid net worth in Bitcoin, a couple other ones just more as swing trades. The Bitcoin holding I'm willing to hold for a little bit longer, but I would consider it about a 1/6 position of what I intend to accumulate over the longer period over the next 6 months. And then aside from that, I do have gold holdings, some silver in there too, which, silver and gold have held up amazingly well comparatively to Bitcoin in the stock market. Sure. And then again, for me, it's in and out of stocks more quickly right now, as I do think that there's a bear market in the economy and we're going to see a recession. So those are my biggest ones overall.
Gareth Soloway believes that the recession is soon to follow in 2022 and to keep an eye on Bitcoin. This is important for all crypto investors and traders not to fall into impulse actions when a bear market crash hits. Soloway says that entering the market without an exit strategy and taking on debt without fully comprehending the possibility of being liquidated is a recipe for a massive hit to your portfolio. What do you think about Soloway's price prediction for Bitcoin? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.